Good morning. Yay. So another impressive move up. Tech's leading the way yesterday. And now as these indices, some have cleared some resistance. We said things are beginning a bit more positive as they get now closer to resistance areas, some top of the range. To anticipate some selling picking up, or at least some consolidation. And this morning, it's a relatively sizable gap down in the S&P here. Just looking at the daily range where it's at right now. We still got plenty of time to the open. It's giving back a little bit more than half of yesterday's bar. And on the top of the those bars to the left there. So minor support, subjective. I'll point out, if you look directly to the left, there is no support. Look at the hourly chart. It's straight up from here. There's a void below. Price is traded below and above. What's to the left there is subjective. It'll be used, but in reality, there's nothing down here. So it's going to have to create some support. That's the process. Maybe down here in this nice eyeball and maybe around 50% or so. But, I'm saying that, but as I'm looking at the daily chart, if it goes down there, it's going to be a mess for a few days because, this pattern of two relatively wide bars, these were about the same. The down one is bigger. It can't go all the way back down there, and this again, it's cleared the 200 MA. And if it comes back down here today, the range just gets tighter, or you're going to be a bit more messy, but we'll just have to just see how that unfolds. Look at the futures. So we've been talking about this 4,000 level. Prices got up through it. And notice this consolidation from the prior day. And then it was already moving up prior to the open. And then it just continued to move. So it had that whole nice consolidation and that topping tail that in retrospect turned out to be a bearish bar ignored. It was this little dip under the lows. This is one of the changes that have happened over the years. You didn't see this so much years ago. Today, it's pretty commonplace where bullish moves are preceded by breakdown failures. Even like down here, and then up. It just happens so much more often. So something to take note of. And so pre-market wise, what's yesterday? There is a pivot low there. So here's a chance to hold this area. We'll see if it does. It's beginning to stabilize there as I speak. You can see the 5-minute chart. It did come down vertically. Typically, in a scenario like this where it picks up momentum after a slow period like that, lower lows are made. So bottoms, whether it's intraday or from a higher time frame, most times when you see vertical increases in momentum like that, where it initially begins to bounce, it then makes another low not far from this low, and that's where you start to get a bottoming process begin that's more sustainable for a counter trend move into the void that was created above. So we'll see if that can happen to build some support down here, or whether it's going to come down here to where there's a more significant support level. And that was overnight. So we're not 5 o'clock. We're not going to have that in when we look at SPY, that consolidation. It just had that straight move up. Because that's missing. Yeah, let's look at where I get to SPX. So this is closer to closing prices. I yesterday mentioned, this moving up. If it did start to move up, a target of about 12,000, whole number. The 200-day is declining over the top and pointing down. You got closing prices right here. These are little tails up there, and so it's obvious sticking point right here. It's closed the void. It had the continuation pattern. Now, continuation patterns like this, just the measured move type of scenario would put it up here. So let's just draw it out. So just kind of looking at this and kind of eyeballing it, and the reversal, would kind of put it up toward that area up above the 200. So with that in mind, that, this is still in an uptrend. It's pulling back, corrective mode. And as always, we'll see how it happens. So right now, some upside limitations. 2 bars like this up would be normal to have a consolidation day. Not a big deal yet. I will point out that, so far, unless this pokes higher, right, we've begun to get a bit of a divergence between sentiment, especially, and that often happens after breadth makes a new high. Prices do continue higher, and then you get a lower high before a more corrective price action starts. And we'll see if it gets up here to that top of that range there, because there isn't much to stop it, as long as it doesn't retrace and close deeply into yesterday's bar. The assumption would be that any corrective price action that holds, above that halfway mark, and as we always look at, should be able to continue up toward the top of the trading range. It's common sense, but it's a systematic way of saying, hey, you know what? Maybe this is short-term extended. It needs to correct, as long as, because of the momentum move higher, buyers are willing to step up at a reasonably higher level. That corrective price action would be pretty normal historically. All right, so SPX. There's nothing above here. And there's my screen here. Still relatively same, 39, 35, or 30 on the downside. Like I said, it should not go down there. Could it? Yeah, of course, it could, but it'd be a long way to go all the way down there. And there is news coming out a little later on. This PMI, and Thursday's the big day for the news, but that would be a long way down. And on the upside, 40-50, which is, with 2 up bars like that, even though prices should consolidate, I think that's just too close. That's definitely within striking distance without any really significant lines of defense. A lot of calls were closed yesterday. Well, that would make sense if, moving up like that, people taking profits for sure. 40-55. That's better, Jake. I mean, if things do move up, it is getting further away, but with the ranges being what they have the last couple of days, and you would expect a smaller range today. It's not a huge distance. Whereas down below would seem, well, you figure there's going to be some corrective price action, but it's much more further away. Right. That's, yeah, right. McGraw, 39.35. Um, there's enough premium and for that. And if markets would dip a little more, you can see the stabilization that's at that pivot. Can't, I have to reinforce looking to the left at least several times a day because it works. You know, this move down, and you do get a wide range bar there, which is this momentum bars right there. But stabilization, is that a reason to go long at this point? I think not. You know, even though we got this little bottoming tail bar, there's some stabilization, but bigger moves occur historically after a down move like this that then makes a lower low. So if we should get that lower low, and maybe there's a moving average here, maybe there's some fib line there, but if it was to approach 4,000, if the S&Ps were to approach 4,000, I think buyers would step up there for the only, being a whole number. So I would prefer the markets move a little bit lower for that put spread. And then depending how low they go, I'd be willing to look at the call side right now. For me, it's too close. Right. I am anticipated to be an underperformer by the way it came down, and it was. And, trading range for the moment, but deep retracement down here, it's moved up. Depending on the potency of a reversal today, could be a point where this M top on the weekly starts to break through this support and opens up into the void below. So Q's showing the relative strength, up there near this resistance area. SMH's major turn, I'd say positives, intermediate term for the broader markets. Very nice big head and shoulders type of a bottom on the weekly chart. Neckline. Breaking the neckline at this point would not be a place to be a buyer after this run up. While still a positive, very positive, because this sector's been under pressure. And remember, it has been directly correlated with interest rates, and interest rates have come down quite a bit. And yesterday they were going up. Markets didn't care about that. Well, they didn't go up a lot, but so they're stabilizing down here on support. So what you want to do is just, set an alert. I think it's already on that bar, on that thing. Yeah, it's already set there. Set an alert. See if they start to move up. You don't have to watch them intraday. And the dollar's been hanging down there at major support. It hasn't been able to lift off. Set an alert. Be aware if it does start to move up. Bitcoin, hit the 200. It's a little extended. So as we look at other markets, we look for or others getting ready to come back in. Have they reached their destination, like transports, which they actually led the way up. The airlines led the way up. Jets. They led the way up off of the December low as this monster move. And things like cruise lines. And so there's a strong belief that consumers are going to keep spending money regardless of who gets laid off and loses their job. I think more people were laid off today. I forget which company it was, but people are losing their jobs by the tens of thousands from high-level companies. But so far, the markets don't care about that. And keep an eye on the VIX. Even intraday, it's just kind of hanging here flat. It's at the bottom of this trading range. Dan's telling me triple M, YETX, more layoffs. So how that doesn't matter, these kind of things. Usually in retrospect, you say, how did the markets ignore that? Well, in the short term, the markets could ignore what they want. Well, not ignore, they can ignore what they want, but they pay attention to what they want. And then, things begin to change, or things begin to come home to roost. And gold still marching its way up, slow self-correcting uptrend. And crude oil, just hanging up here. So far bullish price action at these prior pivots, a little sloppy. That didn't do anything yesterday. And just before Dan takes over here, just pointing out, this is still a problem lurking out there, that these are not improving, right? These yield curves versus, and the market's going up. So there's lots of improvements. Major one in technology, and which is suggestive of the markets, even whatever correction action will be coming soon. It should hold. I think it should hold the December lows, and we'll see what happens. All yours, Dan.
Good morning. There was another article in the journal talking about layoffs of part-time workers. I forget the date, but they said since whatever date, maybe 2-3 months, they've laid off 110,000. But yeah, Yext had layoffs, so I immediately pull up the chart, and this is a long watch. Look at this multi-month consolidation, 20 MA flattening out above the 50. Whenever we say that moving averages are trend following, but this 20 and 50, if you were to take off the candlesticks, tells me a beautiful story. Starting all the way down here when they were touching each other. Look at that. So I'm not trading the moving average, but this is telling me buy a breakout, is what these two are telling me. And that could be today. So that's why it's on my long watch list. Microsoft earnings after the bell. So that obviously is a market general, as we call it. So that'll move the markets. I had AMD on my long watch list yesterday, but there were so many patterns. Well, this one gapped over it actually, but there were so many patterns that they just weren't clean, like including spiders here. I mean, we were bullish all day long. We added a lot of long exposure, but into the close, we said we have an hourly climactic sell setups with a bearish 1, 2, 3, with a little bear flag on the 15 and a big price void. So that into the close gave us a bearish bias under this 15-minute pivot. And that's exactly what we're getting right now. So 15-minute low, I got a day trade short bias. We'll see what happens here as always. We did one earnings trade. It's gapping against us here, 265, right here to all these three converging moving averages. But we did the 257.50. So I'll be staring at this at the open, but this is another example where it gapped against us, and we should have a beautiful open profit, even though it went against us. Let me get it loaded up here. So right at the market open, I'll see what it is. 247. All right. We actually had a nice open profit yesterday. We should have covered half yesterday. I'm riding. Yeah. I agree. That's the start, Thomas, of a bottoming pattern. And we do these MT lives for 5 years, and And this is right out of the bottoming pattern one. So it's still consolidation and a downtrend, but yesterday is my something bar. It's a closing breakout on volume. So it's the 20 MA is not flat. So I would like a little bit more sideways action, but yesterday's bar makes it the start of a potential bottoming pattern. So yeah, that's going on the list. Yeah, I was at the gym yesterday after the market, and I heard this guy saying, and I just heard one sentence from him. He was talking about Lucid Motors, and he was telling his buddy, he said, they are in deep doo-doo. And so I looked at the chart. Chart's actually bullish. So, you know, that really didn't tell me anything. But let's say I heard that comment, you know, over here. My reaction might be, you know, this guy must have insight on the books, and this thing could be going to zero. But the chart, nevertheless, is telling us they got major problems. ENPH, I was watching this on this first turn as a Climo. Now it's a new low. When I trade W bottoms, I like the retest to come down in a controlled manner, not this ugly one red bar. Nevertheless, I set an alarm at 2:32. It could possibly be the start of a W bottom, new low plus, but we don't have any potent reversal yet. If someone can correct me, maybe it was either Dollar Tree or Dollar General. I saw a news thing that the CEO is leaving, and this is gapping up in a weak market, and it's a bottoming pattern. So I'm assuming it's this one, and the market likes the CEO leaving. But this is a beautiful put spread idea if there's any juice. Google, why am I looking at Google? Oh, Google's getting sued by the FTC. More trade monopoly problems. So that is a call spread candidate. 30-minute low. Yex we talked about. Siggy. Siggy said something about earnings. Put spread candidate over yesterday's high. MRO. Greg, look at our entry yesterday. MRO right into the close. Look at that. Perfect. Now it's gapping up to yesterday's high. That's a beautiful inverse head and shoulder. We bought long calls on that into the close yesterday. IPAR, also they said something about earnings, light volume. VIAV. Yeah, I like yesterday's bar, bottoming pattern. That's a watch. Intuit, I had an up alarm go off. We shorted puts yesterday. So this was in the weekend letter as the put spread. And I mentioned yesterday in the green room, this is a fantastic example of I would never do a directional, even though it did break out in retrospect. Well, actually, because of the gap, you could have, it did turn into a directional, but when I gave it, it's at the top of the range. And I just said, that's a power bar. We sold out on money put spread. And that's, oh, today's coaching, option coaching, by the way. We're talking about all kinds of fun things. Lulu got a downgrade. This looks horrible. Wow, this stock is very volatile. So that's looks lower. That looks ugly. MGA had earnings 59.70. I don't know what to do with that. HPK gapping up 30 bucks. Oh, that I think had maybe buyout rumors or something or other. Here, Grom, another bottoming, gapping up, bottoming pattern. I don't like this gap though, but that could set up for day trade. 6. This, you know, the leisure 6 and C's and cruise ships and jets and hotels. Amazing 2-week rally, but C's weekly, monthly. I'm going to keep an eye on for a pullback. It has a big void on the weekly still. These were all earnings. Let's go through these earnings stocks. Cold gapping up, a downtrend, no interest. SFNC, I can't tell where it's gapping. ONB, it's flat, no pattern. IBZ, flat, no pattern. We'll come back to, hey, WMB was on our short list. My alarm just went off. What? Oh, what's going on here? WMB I had as a short watch under last Friday's low. But if this candle's real, I don't know if it's real or not. It's not moving. So I don't know what's going on with that. All right, DHI power uptrend. Look at this, 20 above 50. And look, they were converging here, broke out. Look at that. That is a power uptrend. WFC. Are these real, Alex? This is the second one. I don't trust my charts. You got to look at level 1.
Some crazy moves. I don't even know if they're moves or just bad data and a bunch of
I look at level 1. I think it's bad data myself.
stuff. Morgan Stanley.
WFC. Yeah, the bid's $4, 4 by 90 WFC. So something's going on with data. I don't trust it. That's a data problem. That would have been in the news if it happened.